All right, hello and welcome to Camel Finance. I'm your boy Camel, and today is, of course, US CPI day, so that's going to be discussed in today's video. Got a little bit of Bitcoin news for you first, some pretty interesting metrics, then we're going to show you the CPI data. It is currently 10 a.m.-ish UK time, so the US CPI data comes out at 1:30 UK time, but what I'm going to do is what I usually do on these sort of CPI days. I'm going to record up to the point of the CPI data. Then I'm going to switch the recording off, get the live data at 1:30, come back, edit that in. So by the time you're watching this video, you'll probably already know the CPI data. But in the meantime, let's get into today's video. Look, will Bitcoin make an all-time high in 2023? I actually think there's a very good chance it will, and the majority of the market does not agree with this whatsoever. 47% of the Bitcoin supply has not moved in over 2 years. This is a new all-time high, and this is coming from ARK Invest. At the same time, 77.5% of the Bitcoin supply has not moved in 6 months plus. This number's been slowly increasing since a short and minimal decline at the end of 2022. The people left in the market, the people that held from the top all the way down here, they're not selling, okay? They're never selling. And this is exactly what we need to say goodbye to the bear market. We need all the Bitcoin held by people that have no intention of selling in order to force the price to the upside to create sell-side liquidity, or said another way, to incentivize those holders, those diamond hands, to finally let some of their Bitcoin go. Robinhood has decided to remove BSV, this is Bitcoin Satoshi Vision, which is a fake version of Bitcoin, from its platform. So there's no room for fake Bitcoin, no room indeed. Say goodbye to BSV, BTC only, please. Look at this for news, okay? FTX has apparently recovered $5 billion in cash and cryptocurrencies. The regular viewers of this channel will know that I have said this time and time again. This is becoming a leitmotif of this channel almost. I have been saying, do not underestimate the ability for this whole FTX thing to turn around and disappear, to turn on a dime and disappear, and just to get seemingly resolved overnight. I've also been pointing to the Mt. Gox hack to illustrate this point. FTX may well have recovered $5 billion in cash. It doesn't even need to, though. This is my point, and this has been my point. All they need to do is tell the people that had their funds stolen from FTX that the people that were scammed are going to get their money back. Now, keep in mind, they don't even have to give the money back. They just have to tell you they're going to probably give your money back at some point. This is essentially what they did with the Mt. Gox hack. There's still a whole heap of people waiting to be reimbursed. They've recovered the funds, and every few months they print this fund. Oh, the Mt. Gox exchange, all of that money is going to be given back and dumped onto the market. But these people still haven't been made whole. And we're what, like 6-7 years down the line, okay? So this could absolutely be the same thing. They can say they've recovered $5 billion of user funds. They can tell you they're going to reimburse you. The market will suddenly go, okay, problem solved. You don't have to put SBF in jail. He can go free and everyone's going to get their money back. Happy days. And the market can continue to progress higher, continue to shake this one off. And remember, it can do this without anyone actually receiving any reimbursement whatsoever, just like the Mt. Gox exchange. So anyway, I think this is a pretty good call. This seems to be the direction it's going. I still would not be at all surprised if SBF does no jail time. It just seems like that's just how the world works, unfortunately. That, of course, remains to be seen. So, Bitcoin. These have been the most profitable times to accumulate Bitcoin, when the net unrealized profit and loss is still deep in capitulation territory, like we see right now. So even with the current price breakout, we are still in historical and generational opportunity for Bitcoin. Remember, the strong hands are holding Bitcoin and they're on a sharp rise. Only a matter of time before the price follows. And you can see that here in the yellow line. The strong hands continue to hold. They're not selling because they understand what they hold. Whilst retail continues to scream recession, as of the January 10th close, credit markets are not screaming imminent and deep recession. High yield versus treasuries weekly, you can see here, not a recession look whatsoever. Meanwhile, the ISM data and leading indicators are signaling a slowdown in our economy, but this will also push inflation down. This will force the Fed to pivot. Stocks have this 3 to 5 month period of Goldilocks zone before the effect of the recession kicks in. Once we've come through the CPI data today, once we've got that, once the market's digested it, we get to look forward to tomorrow when earnings from JP Morgan Chase, Bank of America, Wells Fargo, BlackRock, Citigroup, and Delta will all be coming out. So regardless of the CPI print today, there's still a wall of worry for the markets to climb. The current Fed funds rate probability for the February meeting is still pricing in a 25 basis point hike at around 77.7% probability. Remember, it's important to listen to what the bond market says rather than the Fed. And I've shown this before, I've shown this over and over again. The current Fed funds rate in orange is sitting above the yield on the 2-year US government bond. Historically, whenever this has happened, whenever the Fed funds rate has crossed above, the Fed has had to pause rates and then shortly after has entered a cutting cycle. Pause rates entered a cutting cycle. Will this time be different? I seriously doubt it. The bond market is telling us that the Fed is done hiking. So here is the CPI data. With the magic of editing, I can change this for you now. All right, hello, and this is Camel from the future. So here are CPI results for you. We have hit the forecast on every single metric. So US CPI was forecasted at negative 0.1% month over month. Year over year, we hit 6.5%, which was exactly as forecast again, and below the prior reading of 7.1%. Core CPI came in at 0.3 again, right as forecasted, slightly above the prior readout, and 5.7 year over year, exactly as forecasted, slightly below the prior readout of 6.0%. Jobless claims came in at 205, so they have gone up 1,000 from the prior readout, but significantly below forecasted. So wholly speaking, inflation still seems to be cooling off, so that is a good thing. That should translate to bullishness in the markets. This should also speak to the Fed having more leeway, more wiggle room in terms of coming to a pause in rate hikes sooner rather than later, as the bond market has been telling us. One of the things the Fed said it wanted to see was unemployment rise. I'm not really sure if this qualifies as a rise. 1,000, it's not really a significant rise. So the labour market is still pretty strong. We're not seeing unemployment rise. This could well have a negative impact on the markets. All we can really do from here is let the dust settle a bit. As I said earlier on, we've got a big earnings release to get through tomorrow. So there's that. And then we should be looking forward to the Fed funds rate meeting, the FOMC meeting in February. So for now, not really much to do apart from just respect the charts. There's going to be some volatility. I'm sure of that. There always is volatility around this. So I'm expecting a lot of up and down wicks for a while until the dust settles and investors can figure out which way they want to take the markets. If I hop into some charts, starting off with Bitcoin, as expected, as suggested, we have broken out. We are above this blue line here from the low back in June. So all I can do is respect the charts. I know some people will be thinking, yeah, well, what if it rolls over? What if this? That's what stops are for, okay? I'm going to let my stop do my worrying for me. I don't have to do anything from here. I'm long, I'm strong, and we should, in theory, have a full 60-day cycle ahead of us now. So this should take us out somewhere in the neighborhood of the second week of March before we can drop into a cycle low. So I expect at least around 40-45 days of run up here. And I also expect, once we've found that cycle low wherever it formed, I expect another 1 or 2 daily cycles to unfold after that, and both of those I expect to be bullish. So of course, as ever, one day at a time, but for now, I am currently long Bitcoin. Here's Ethereum. I'm not quite long Ethereum yet. I'm just waiting to see a little bit more follow through, perhaps a daily close above this box, and then I shall be entering. So expect me to tell you I've gone long Ethereum soon. XRP, still looking to get long. Want to see it clear this 40 cents red line here. So if that happens, expect me to tell you I'm long there as well. MATIC, I'm still holding a MATIC position. As you can see, it's not doing much at the moment, but that's fine. We continue to push that. Zcash, same story pretty much. Still holding a position here, expecting this to resolve higher. Take a look at the dollar. Okay, the dollar has finally come down and touched this blue upward sloping support line. Significant breakdown, retest, and resumption of this big green horizontal level here. I'm going to get rid of this because we don't really need this. It's just in the way a little bit at the moment. But this is what I'm focusing on, and the reason for this, if you're new here, is we had the lead-in phase, a extended rate of advance, and then the blow-off top move. This is how we managed to pick the top in the dollar. Since then, we've lost the first one here. We've lost the second one in red, as you can see, and now it's a matter of time. I think likely we're going to have either a counter trend bounce off of this support, or perhaps we'll just chop around on it for a while. I don't expect it to hot knife straight through here, but I do ultimately expect it, after either having some level of counter trend bounce or a grind sideways, I then expect it to resolve to the downside depending on which path it takes. So I do think the dollar goes lower. I think this is bullish risk assets, but I also think perhaps it's going to have a reaction off of this line since this has been such significant support all the way back here. The chart of truth, the US 10-year yield, as you can see, rejection, 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 and now continuing lower. If it can lose these lows here, then I would expect big downside to follow, and I would expect risk to come on quite strongly. Here's the 2-year yield. Again, similar sort of story. Lose these lows, and I would expect it to be lights out for this. This is likely going to see pressure put on the Fed to switch to a pause in rate hikes as well. Again, as ever, one day at a time. Of course, the dollar coming off means gold is benefiting, so we can see that here. Gold continues to push higher. I expect to see the miners continue to push higher too, and the same is true of the junior miners. Hopping into silver. Silver, again, it still can't quite recover this trend line, but at the same time, it's got this box situation going on. So as I keep saying, if we continue to get rejected and we roll over, then the trade will come from a breakout of this purple trend line here. Failing that, if we continue to chop around and then break out of this box, the top of this box here, that will be a long from me as well. So for now, continue to play patient. It looks like if the dollar is going to continue to break down, then perhaps this is what the long is going to look like over the coming weeks. So from this top of this box here, if it can break out. Failing that, like I said, if we're going to continue to push down underneath this trend line, then it will come from a trend line break. So for now, continue to play patient with silver. Not much I can do about that. Of course, I still have plenty of precious metal exposure in gold and the miners, which I expect to probably gap up. Yeah, it looks like they're going to gap up in pre-market here. So happy days there. Not much else to say about that. If Bitcoin can follow through here, then that should be good for my positions in Marathon. Looks like it's kind of completing a back test of the breakout before moving higher. Again, it's too early to tell at this point. All I can do is push this trade and see what the market can give. Here's Riot. Riot looks to be working on breakout retest resumption. So, you know, called out ahead of time and expect this to resolve higher so long as Bitcoin can continue to push through. MicroStrategy, here's MicroStrategy, so working towards break even. I would expect this to finally come back into profit. And the same is true of Coinbase. Coinbase looks to be like it's going to gap to my break even entry. So happy days there. Not much I can say, really. Not much I can do, in fact, apart from just let the stops do the worry and try not to interfere with the positions and see what the market can give. FTSE 100, again, still breaking out, so still targeting this higher space, this higher empty black space up here for around 8,500, I think is a fairly reasonable target for this. So we'll see what can happen over the coming days. We'll see what happens with the VIX as well. Again, I've still got this open because we could easily see a spike in volatility, but for now, this does not speak to a stock market plunge. It actually speaks to quite the opposite. If I get stopped out here and we lose this low, then move down into the teens would likely see a massive rally in the stocks. Again, remains to be seen. For now, things continue to look constructive. Here's the Dow. Look, again, breakout retest, consolidation. It seems to want to resolve higher. Obviously, it can turn around. It can turn around on a dime, but it hasn't done that yet, so that's fine. Again, as I've been saying for the NASDAQ, looking to buy a breakout of this downward sloping red resistance line. So can it get up there? I expect it's probably not going to hot knife straight through this. It's probably going to have to do some sort of building before a breakout. But I'm lining this up as a long, looking to go long the NASDAQ in the near future. S&P 500, again, I've outlined a few scenarios here. We could get rejected at resistance and then drop down into this cycle low and go and accept the blue count and get rid of these 3 green arrows here. Or if we are going to break out, then I have to respect the breakout because I am a breakout trader. So if we break out, I'll be long here. I'll be likely about to reject these blue arrows and accept the green count as the cycle count, and therefore we'll be looking for something like this to unfold. Geo, something I expected to be a super performing stock. My stop loss is around these lows. As I've said, I won't tolerate any loss below this low here. Some encouraging signs yesterday, although we did get wicked back. If this can start to push up and go, then the strategy is the same as always. Buy the breakout above the top of the box. We'll move the whole stop loss up to here. Well, it's already up to here. I just haven't illustrated it on this, but that is where the stop loss is, as I've been saying over and over again. And we will allow the profit from the first trade to finance the risk for the second trade and then look to repeat this pattern as many times as the market will allow. And lastly, a quick look at ARK, okay? Very hated. I know a lot of people are not into ARK and I don't blame them because for an ETF to draw down as much as 80% is pretty much unacceptable, to be honest. But if it's going to break above this box, which I've drawn here in blue, then that will be a long from me. As a trader, I have to remain indifferent, no strong opinions, zero emotions. So if we can do something like this for ARK over the coming weeks and then break out, that will be a long from me. So that's that. There are still a massive amount of hurdles to clear. There's still a massive wall of worry to climb, but those are the things that bull markets are indeed made of. We've got major bank earnings tomorrow, so we've got to clear that, and then we can look out to the Fed funds rate in February. As ever, one day at a time. All I can do is let the stops do the worrying and do my best to profit from these markets. If you want to continue to get updated on my trades and on my positions, make sure you're subscribed and turn the notifications on. Drop a like if you appreciated today's video. Drop a dislike if you didn't. If you have anything to say, throw it down in the comments. And until next time, I'm your boy Camel. Take care. All the best. Cheers. Bye.